Good morning, everybody. It is Ruthie Rocks, and it is windy out there today. Yeah. Put on my spectacles here and get started. Beautiful day in windy city here of Las Vegas. It is going to get up to 50-mile-per-hour gusts today. Whew. I know I had to go outside and put all my pillows so they couldn't be blown into the pool. Don't know if y'all have that problem, but it's terrible when they get saturated, isn't it? What is going on in Las Vegas, and what can we take away from what's going on in Las Vegas? Because I hear from all over the country that things are a little different. And we always say we live in paradise because our market is really, really good. Y'all are selling 97 homes per day. 97 homes per day. And now last year, of course, crazy year that it was, you were selling 128 homes per day. 97 is fine. I think 97 is fine. 100 anywhere. When we get into that 100 range, I think we're doing pretty much 200 sides, plus the new homes are out there. So hopefully people are making a good living building their real estate business. We have 45 days of inventory, kind of been hovering around that for a while. And you all listed 164 single family homes since Friday. And that is 70 of those were 450,000 and under. So that is just fantastic. Let's see, that's 31% of the market in the median price range. That's pretty good. And we're selling them. Y'all are selling them. 97 sales a day. So you're selling them. And Mr. Abraham, please turn that off. Wanted to make mention of this again. If you haven't heard me say it 100 times, we have a very diversified market. If you look at the $1 million homes that have sold, we're selling $3.7 million homes per day. So quiet, please. So anyway, that's 31% of our market is the 450,000 and under. And then the $1 million homes are 16% of our market. And the investors are 23% of our market. And then everybody else kind of falls in those other areas. And that would be 450,000 up to $1 million is the rest of the market. Not bad at all. One of the things that you all have requested, which I did. Let's see, let me get you down here like I like to be. Okay. I took the stats and I broke them into separate PDFs for you, or JPEGs, and you can print these out, and then depending on who you're talking to, or maybe you want to have multiple sheets of paper or whatever it is, but it might be easier for people to focus if they are just looking at one stat at a time. So I did the $1 million stats there. We've sold $611 million homes so far this year, million plus, and again, 16% of our market. And then let's see, that behind this one and show this one. This is the investor sales. This is a recap of the investor sales. And I went back. I know that the MLS recently, I don't know if it's once a quarter or how often they do it, but every once in a while they go back and they kind of go through what we call the MLS IDX feed. And sometimes things change, which January to March changed for some reason. And it lowered us. I think the other day we were at 3,500. Now we're back down to 3,400 investor sales, non-owner occupied. Now I'm not so sure how that gets changed. I have no idea. But it did change for the first quarter. Anyway, we're still doing 21 sales a day to those investors. And we're going to talk about that in just a second. And that is almost 24% of our sales. So moving right along here, what do we have here? This is the previous year's sales totals. Last year, we averaged 101 sales per day with a median price of $430,000. 2021, which was quite a year, we were doing 139 sales per day. But the median price then was $386,000. And of course, the interest rates were obscenely low. And here we go with the year-to-date sales compared to last year. And last year was 88, and the year before was 121. So let's see what else we have here. Month to date. So June last year, we were doing 128 sales a day. This year, we're doing 97. I talked about that earlier. Not bad. That isn't really bad at all. And let's see what else. Here is the daily recap of Las Vegas real estate activity as we reported first on the show. This says how many available homes we have in the separate categories, and then how many we listed since Friday. So that's where I was saying earlier, we listed 164 single-family homes total. And of those, 70 were in the $450,000 and under price range. Not bad. This has been holding steady. So what that means, everybody, is you all are out there listing, and people are listing their homes, and people are buying homes. So there's various lender programs out there for people to buy down the rate. Have the seller contribute to that sometimes. There are, a lot of people pay cash for their homes. I know that everybody thinks everybody's out there getting a mortgage, but no, everybody's not out there getting a mortgage. There's a large percentage, it's more than 30% of homeowners own their homes free and clear. And I think it is 40 some percent have their home equity is 50% of its value. So that's pretty strong. So, people do have money, and a lot of the money that people have right now, they made in the past several years as the prices went up. They went down a little bit, but not drastically down. And they've been holding pretty steady. So people have made money. We've shown you the appreciation chart. We've shown you the equity people have. And so when you're listing a home where someone, they've really made 18%, what's that, in 2021, they made 18%. Well, they might want to give a few $1,000s to that buyer to buy down, and then you play it forward. So anyway, that's kind of what's going on with our market. And I want to talk a little bit today about the rentals. So, whoops, wrong one. Wrong one. Where's my rentals? Where are my rentals? Okay. So here we go, rentals. So in 2022, year to date, meaning through June 19th, we had rented 10,736 homes. That was about 65 a day. And back then, the median rent was $2,350. Well, this year, we're doing 74 rentals a day. Now, this is probably an indication of the interest rate. If there's any indicator of the interest rate being high for some people and knocking those first-time home buyers out of the market with the down payment and so on and so forth, because they weren't around to get equity in the past 3-4 years. So they have to save their money to put their down payment down or get a gift, or hopefully they have it in savings. But in any event, the median rent hasn't changed much, $50. And what I wanted to say is when I listened to Brian Lazine, he talks about, of course, he gets pretty deep into how the 10-year bond affects the interest rates and what Powell is going to say with when I think last week he gave his little recap of where the market is, and inflation isn't as bad as they expected it to be, so on and so forth. So in any event, I think that we may see some first-time homebuyers coming back into the market maybe next year, because it seems to me that what I'm hearing, reading between the lines, and again, there's many, many different economists out there predicting different things, but the factor remains that inflation is kind of holding. So I think that Powell says, real estate is one of the most important parts of their formula when they determine how many basis points they're going to lower or raise the rate. So we shall see, because in other parts of the country, prices are going down. We are a small speck on the map when it comes to competing against, the Californians, the New Yorks, the Chicagos, the Floridas. And so the fact that our prices have gone up a little bit and our rent has gone up a little bit, I don't think really impacts what the feds do with the interest rate. But we're in a very nice spot here. The rentals haven't changed that much. And the only thing that's changed is more people are renting. And that's good for the investors. And there is more of a turnover now as well, because when we had COVID, people weren't moving. So now you see more of the turnover, people being in the rental 2 to 3 years, and maybe now they want to lease a bigger home. They might not want to buy, but they want to lease a bigger home. So that affects the rental market as well.